All right, guys, good morning. So let's go ahead and take a look at what's going on, starting with the DXY here. So DXY tears the level here yesterday. Looks like we're starting to come back in. Um, so this would still be a somewhat of a bear flag because if you take a look here, the down move, and then now it's just chopping sideways, even though it's upsloping. So if this trend line here were to break, this trend line that I just put in real time, if this were to break, then you have support all the way down here at 98.70. Resistance is where it's currently trading at right now. Um, well, this upsloping trend line here, we could adjust this a little bit and then move it further up. This one as well. So now that is your resistance right there. If we do a fib, we drag it from the top here all the way to the bottom, and then now we have the levels here. So the 50% retrace, that's usually where price likes to go to. Now the 200 simple moving average is right here where the 0.382 fib is. So if this were to rally up, that would be your near-term resistance. If we can get through that, then a 50% retrace would be next, followed by the 618 fib, which also has the end of the topping tail here. So around 99.81. Then going all the way up here, you see the pivot lows up here, coinciding with the 0.786 fib, and then all the way up to where this two trend lines meet, which would be major technical resistance until proven otherwise, around 100.41. Now let's go ahead and take a look at the US 10-year yield. So the US 10-year yield has just been ripping to the upside here, even though the Fed is going to cut rates for the third time. I heard this from Garrett Soloway, chief market strategist at verifiedinvesting.com. He has over 20 years of experience. So pretty much the Fed is now really in control of the long end of the curve, meaning he's not in control of the long end of the bond yield. So 10-year, 20-year, 30-year, he's not in control of that. What he's in control of would be the short end of the curve, would be the shorter term bond yield. So like anything below the 10-year, I think he could be in control of the 5-year, the 3-year, 2-year, 1 year, or less than that. Um, just because the bond market is the biggest market in the in compared to the stock market, forex, commodities. Yeah, it has the most traders, the most investors. So it has the most volume compared to everything else. All right, so now let's go ahead and take a look at the VIX. The VIX is higher today. Looks like it's piercing back into this level here. Meaning, yeah, fear is definitely creeping up again. And if you take a look at the indices, futures, the Dow is continuing to go lower here. We do have some support here at 47,282. We'll see if that get reached today. Major technical support would be down here at 46,928. We could reach that if it keeps going lower. We may be able to reach that by end of the year. Um, the Russell 2000 futures is also in the red right now. It's continuing to go lower, but what type of move this is? If you been studying the charts with me, like similar to this move right here, up move and then a little bit sideways chop, and then up move, sideways chop, which tells us that it could have one more push up, potentially going lower or breaking out. But we will find out. So if this were to have another move up, it could retest maybe 25.68. If we look closely at the levels here, this level coincides with the upsloping parallel channel. This upper level here, this is also another parallel channel that connects the 2021 top through the 2023 bottom here. We did tag that here before the downtrend. We tagged it the second time back in October 25th, 27th. And if we do get a push up there, that would be a amazing shortable level, in my humble opinion. And Nasdaq is also down here below this dotted lines. This is the midline, the bigger parallel channel that goes back since 2020 bottom, 2021 top. Um, we haven't yet touched the end of the upper end of that parallel channel. But this one right here, this bigger one right here, we did tag. So the bigger one, that one I believe goes back is the .com. If we zoom out on the weekly chart, that one goes back, yeah, since the .com. And we did tag that recently. We did tag that level recently. I believe, yeah, that is the level we tagged here on October 27th before having 3 weeks of pullback. We also broke below this trend line that goes back since May, and we are kind of below that. And then also this upsloping parallel channel that we broke here on November 17th. And ever since, we've just been below that. So if this were to curl over, the 23,000 level build, this smaller parallel channel would be support. And if that were to break, you have your previous all-time high down here, and then 200 simple moving average right here as of this time. The 200 simple moving average might get up to 23,697 at some point if the drawdown were to stall out, if or we may not we may not have a drawdown. I mean, if this thing keeps going higher, you have resistance 26,166, followed by 26,251, and then new all-time high here at 26,606. That's always remember that there are always those two possibilities. It's either gonna have a drawdown or more upside. But right now we have very limited upside compared to how much drawdown we have. Just because we have these resistance here and over here. So if anything, we could go up maybe 3.75% more to the upside for the Nasdaq. That goes for the S&P as well. But the drawdown we have compared to the upside is like double that. So at least 7.18%. And if that were to break, we could be looking at 12% move to the downside. And then we have the ES futures, and the ES futures right here, same type of deal. From where it's currently trading, we have about 2.25% to the upside before running into some major resistance. And then we have about a potential almost 5% drawdown, at least to the lower end of this parallel channel. And then down below here would be about 8% drawdown if we were to come back to basically this lower end of this parallel channel right here. So this parallel channel right here goes back since 2020, and that is a pretty significant parallel channel because we never broke that parallel channel before. Even though it does kind of cut through here. I mean, we broke it here, but then we got back above it. So we've hit it many times. So this has hit it twice right here, second time, third time right here. This would be fourth hit right here, fifth hit. So this would be the sixth hit, which will weaken this parallel channel, which means we may even revisit the April 2025 lows if this were to break. But right now we are not close to that level. So for all we know, we're just gonna chop sideways like this in this parallel channel that it's currently in until maybe February of next year. All right, so I'm gonna go delete some stuff here so it looks as clean as possible. And let's go ahead and take a look at gold. So gold is down a little bit right now, but it's still stuck in this range here. So it's range bound right now. For all we know, it's just gonna bounce higher as long as this trend line don't break, and then this is down here. These the wedge pattern it broke out from, as long as it doesn't go below that. If it ever goes lower, then these are the levels to watch, and also this upsloping um, trend line here. And then for silver is pulling back sharply from this from the midline. This it almost touched it. This midline, the parallel channel that's upsloping, and it is if we look at the 4 hour chart to see how it looks, it is actually trading below this trend line here. So it did pierce the trend line here, and then now it's pulling back. So we'll see if it pulls back to here, to as low as, I would say, as long as it keeps pulling back like this, not like straight down. I mean, straight down that would be acceptable too, but as long as $60.21 were to hold. But if it just keeps going like this, slowly pulling back, then the level that it must hold would be $60.54. All right, so now let's go ahead and take a look at that Magnificent Sevens. Tesla is continuing to go higher. It might fill gap fill here, 452. Actually, it might have filled gap fill already yesterday. That's why we got this pullback yesterday. So the next level today would be all the way up here at 456 or 457. Nvidia is also continuing to go higher. This might retest the midline of the parallel channel here around 188, 189. Microsoft is actually lower today. This is at support, so if you're trying to buy Microsoft today, you probably just want to set your stop, nothing below 481. Yeah, because that's lower. That's gonna be below this trend line that's upsloping here, meaning that the bear flag might be triggering today because down move, sideways consolidation. We could even do a measure move, how much this thing could go lower. So 9.18%, where it broke down from, just another 9.18% to 443.45. And then Meta is also potentially confirming the move from yesterday. So we broke down this upsloping trend line, and then now it's continuing to go lower, potentially filling the gap here at 645. So if it gets to 645, you probably just want to set your stop. Um, nothing below, I would say nothing below 637. Google is continuing to go lower a little bit. It did have a bounce yesterday. It was a 1% bounce. You have resistance all the way at 320. So today the resistance, yeah, would be at 320 if this were to get a bounce here again. Otherwise, support would be at 311, and then the next support would be gap fill right here at 304, and then the upsloping trend line right here all the way down 302. Then Amazon is also potentially getting a bounce from where it's currently trading. It did not close below this trend line, so it's safe. For all we know, it could just rally up to 238 today or in the coming days. Apple is also getting a little bit of a bounce. It did try to retest 280 yesterday, 281, but it is reversing for the fifth day in a row. It's been down. Um, so yeah, for today, I would say you just don't want this to break. You just don't want this to go below 276, or it confirms the down move from basically, or confirms the breakdown because we pierced it here back on Friday last week. On Monday, we kind of continued the downtrend a little bit, and then yesterday we tried to get back up to 80, where it was support and acted as resistance, and now we might be trying to retest that again. So it could go to as high as 281, 282 today if this were to really retest that area where it broke down from. Otherwise, just watch out below if it breaks 276 today. And then lastly is Bitcoin. Bitcoin is continuing to go down after a pierce of this wedge pattern. So if it's really a confirmed breakout, you want 91,400 to hold. Otherwise, that should be your stop if you're going to enter it right now. All right, guys. So that is pretty much it. I hope you found this useful. Feel free to share this with your family and friends. If you haven't followed me on TikTok yet, feel free to follow me right now, so you don't miss out on my next update. Uh, Feel free to like, if you enjoyed this, and feel free to leave a comment or send me a direct message if you have any questions, concerns, or special requests on what asset you want me to do technical analysis on. All right, guys, have a good rest of your day and see you guys next time. Bye bye.